LiteFinance, the world of financial freedom.
Hello, it's Monday, December 19th. It is a time to start the market forecast. This week ends just before the Christmas, and exchanges from UK and New Zealand will close earlier, but nevertheless we got a solid round of strong macro data. So as always, we will discuss the calendar and then we will switch to summarize fundamentals after the week with central banks, and after that we will go to the charts and see what we can expect on Euro USD. So, Monday, as usual, is a rather slow start and there is no significant data that could move the market immediately. On Tuesday, early in the morning, we will get a rate decision from Japan, although, as we know, the Bank of Japan still hasn't changed its rhetoric still, and no change is expected. Later, during the day, we will get retail sales from Canada, and that will be all as for Tuesday. Next is Wednesday, when we will get inflation data from Canada, US consumer confidence, and crude oil inventories. On Thursday will be published another revision of US GDP for third quarter and UK's fresh GDP data for November. On Friday, we will get another inflation reading, namely PCE from the US, then core durable goods orders, and this time Canadian GDP. So as you can see, there are a few moments where we can expect some bigger market moves. Okay, now we go to the fundamentals. The US economy faces the implications of rate hikes, and too fast growth of a borrowing cost can have a disastrous effect. The problem is that markets don't believe the Fed. Investors think its actions will be different from its words. Rate forecasts are no call for action. They can be easily modified. If CPI continues falling drastically, what's the point in bringing the federal funds rate to 5.25%? Markets disturb the Fed. Stock indexes rally, and a fall in Treasury and USD's yield have driven the financial environment back to June's levels, having ruined a part of the Fed's effort. So there's every reason for discontent. And the Fed hopes inflation will slow down without interference, so it doesn't have to keep the federal funds rate at its peak. But if it starts speaking about that, we can forget about tightening. So Powell has to resort to cunning. That's easy since Powell is a man, and men have only two drawbacks: what they say and what they do. A hawkish stance can help gain time at this stage. So we all think we have bags of time, but that's not true. A recession can come in at any time, most likely when it's least expected. So the Fed deliberately scares the markets with a recession since they are no longer afraid of inflation, while the ECB is determined to continue monetary restriction. So in the medium and long term, this means that the Euro-USD rally will continue. But in the short term, the risks of correction are growing. In this regard, the fall of the pair below 106.25 and 105.95 serves as a reason for sales. And so, on that note, I will end the video right now. I wish you only profitable trades and have a good one, guys, during the holidays. Take care and goodbye.